Okay, we got 1 minute until the news right here. It is GBP CPI coming up in about 30 seconds. So we're going to see what happens. I've got a stop loss place here. 11.25, $11.25. So I'm risking like $44 right now. We could go to the 1 hour to get the view of it, but honestly, right here, it's going to be the best view. Wow, so hopefully we'll keep going up. That was nice. So what do I need? 600. Divided by 4, 164. Hopefully we'll keep going up. This would be really, really great. That was a bigger reaction than I was expecting. Of course, I always like to look in the 1 minute to see, or the 1 second, because I can, uh, to see what that looked like. So right there is 2 o'clock. That's just amazing, like how that. I'm always amazed at news. I mean, obviously, if you're in the move, you're gonna be in a better mood if it goes in your favor. Believe me, I've been in lots of news releases that did not go in my favor. I've had some that went in my favor, and then I didn't take profits and turned around, and I hope that's not the case today. We did just sweep liquidity on the higher time frame, and I'll show you that in case you don't know. It's right here. Basically, I could just show you this. It's this right here. These lows, all these lows right here that were on the daily, we swept that. 120 points is how we swept it. So what do I mean? If you take this tool here, you go to the lowest point on all that, and you go to here, that's Okay, 141. We swept it. So I mean that's I think I don't really I'm not an expert on the depth of liquidity sweeps and how far they need to go and whatever. But I mean, that seems pretty decent to me. So hopefully we'll be good here. What? Yeah. So this is the 1 second. Basically, we blew above this key level right here. We blew back above this liquidity. This is that level, right? Right here. Right there. This is that level right here, this red line. So I can show you what I mean. Look at that. I want to watch. I want to monitor price right now. I can show you guys later. Let me mark this. Okay, so that is the take profit that I need right there. Yeah, I just want to look to the left here. See where we're at. We just barely pierced, I think. Yeah, I just barely pierced that. Wait, what's my goal here? Hold on. My minimum goal is 250. Okay. So I don't even need this much. I just need 5,250. So let's say I was going for 5,310 minus 5,310 minus 4,703 equals divided by 4 equals 151. We have more news coming out later. 5 o'clock. So it's 3 hours from now. It's a Euro CPI. Here's the news that we just had right here. It went up. Reading is strong in the forecast, generally bullish for the GBP. So hopefully that'll be the case. Let's see. Well, one more. $51.75 times 4 plus 4,703 equals 5,310. Hopefully this holds up. Yeah, that's what we want. 5,310, that's good. We don't need more than that. I mean, obviously it's amazing. This trade, if it works out, if and when I hit my take profit, it's not that far. Let me see how many pips. $609 pips. Or points. 60 pips. The daily range is see if we can find the daily range. Average true range. Oh, we're on 10-minute. average true daily range is like 860. It'd be safe to say 860 as the average. So 26613, 26613, 26613. Okay. What did I say? 860? Yeah, 860. So we could take this low, $860 right there. That could be our potential expected daily range. I mean, that's our average true daily range. That's a fact. It does not mean that it will go all the way in that much of an expansion. It could be more or it could be less. So, but yeah, that liquidity that we ran is back here. See this? Right here. We ran that, and then that CPI took us up above this. So far, we still have almost over 2.5 hours for the 4 hour to close, and then we got that news coming up in 3 hours. So who knows where that 4 hour will end up closing? Could be high, could be lower than we expect. We got 45 minutes on the hour candle to close. So we're probably going to be just watching these 15-minute candles. I want to look at something real quick. I want to look at basically the 4 hour over here. Hide this. What I want to do is I want to mark my highest buy entry 26006, and I just want to mark it so I have my reference. That would be the take profit. $26,006. This would be where I bought. That'd be where I'm looking to sell. Okay, I just wanted to mark those out real quick. But I want to go over here and I want to look at. See, so now I don't have to be. I know exactly where I'm at in terms of what's going on. So I want to do this. Or what do you think? This maybe? Yeah, let's do this. I guess this is. We'll start with this. Euro. Okay. Oh, you know why I use this? Because you can line them up. That's the reason why I always use this. Okay. Sorry if I. All right, cool. So. Important thing is to get that right side aligned first, and then it's just easy from there. To get this lined up, it's real easy. Okay, everything's lined up. What I want to look for is divergence. I'm looking for divergence of any kind. We do, I think, kind of have a divergence. Let me look. Right here. Oops, sorry. Okay, so get this trend tool. That should help us visually. It's -2 degrees. Okay, so you see that? -2 degrees from point to point. Let's mark this. Okay, this low. This low's right there, and right there. Woo! Plus 42 degrees. Woo! Man, that is significant divergence. I mean, that is crazy. Okay, so then we'll do it when it's a negative number. I'm gonna mark it red. Okay. I just started doing this last night. As far as like the color coding the divergences, so pretty neat stuff. Okay, looking good. This divergence, yes, we reacted off right there, but I think there's more to come with this. Let's continue to look. Look at this divergence right here, from here to here, and from here to here. Look at that. Just get this more clear here. Yeah, you want to get the right side of the chart lined up and the left side of the chart, and then obviously everything in the middle is good to go after that. So you got that one. -13 degrees. So all kinds of divergences here. And let's see. Just mark it right there. Okay. Oops. This could be green. Okay, let's keep going. Let's do this one first. Which one of these is the low? 408. These are equal here. Sorry about that gray. That's plus 1 degree. Let me fix this. Minus 18 degree. Okay, another divergence. We did not react up, so we can't be blind to bearish divergences. So these would all be bullish divergences. Let's not blind ourselves into seeing only what we want to see. Okay. So let's make sure that we stay neutral-minded. 1 degree plus here. Let me check something real quick. Okay, looks like we pierced higher here. There's this range right here in this key level in the middle. Obviously, my take profits here, but what you would want to see is a close above this, also a break above here as well. Yeah, so you could, do whatever you want, but you could set an alert up here. This high, 788, come over here. 789, and you put your alert at 789 right there. Because that high is 788. So as soon as it pierces it, you'll get an alert. If and when it does. My concern would be this range and a potential reaction bearish off of this range to continue to the downside. Which is why I'm looking to see if there's any divergence bearish. Okay, let's continue just for a second here. So we're looking here. Plus 7 degrees, whereas this one was only plus 1 degree, but they're still technically moving in the same direction. So I don't know that you could really call that divergence. See, here to here, let's look at this. Here to here. That goes down, and this goes up. Do you want to count that? Let's see. Do we want to count this? Where, let's see, the most obvious one first, I guess. Here to here. And in the same time period, here to basically right there, I guess. That's plus 8 degrees. This is minus 14 degrees. Okay, so that is divergence. That would be bearish divergence. And then right after that, we went down. Okay. So, could we at least see a retracement up to this 27,000 level, which is kind of the bottom of all this range here? This huge range right here. So could we see a retracement up to here, possibly, and then if it wants to go down, it would continue down from there. Now let's zoom in over on our divergence chart, and let's zoom in to the 15. Let's look for more divergence. Okay. Let's see here. So this is divergence right here. Minus 13 degrees. Okay. During the same time period, plus 16 degrees. Okay, let's go back up. So yeah, we have this small divergence right here on the 15-minute, but on the hourly we can see much larger divergence, which means, you know, much more significant, which would be bullish divergence, which is bullish divergence. A sweep below these lows right here, which would be, you know, liquidity sweep. That's 0 degrees. That's literally equal lows right there. Swept here. Of course, much. There was even more than that. We had this low as well that was also swept. But we're just looking at this for divergence purposes. Okay. So what we can know is that even though we had this little divergence here, this is much more significant. Plus, we had a liquidity sweep also in addition to. So the thing is, one thing to be aware of is this divergence. Let me see. What actually is this degree? Once we get it on there, let's look. 0 degrees here. 0 degrees, okay. And this one, +3. So we cannot say that is really much of a divergence. If this was lower and this was a negative degree line, then we could say that. Now this one is, though. Okay, so we have this one is slightly more significant than this one. Okay, so which one is the market going to respect? You can see the euro's pushing down while the pound is pushing up. I wrote in my trading plan that I was only going to focus on the euro and the pound and not really focus on the dollar, because that could be too much. Obviously, if I had 3 charts open here, then I would have more information, but everything with the dollar is upside down with the euro and the pound, so it's just more confusing. I may end up using it more in terms of with divergence. But right now I think we're seeing something interesting now. We're seeing the pound go up and the euro go down. I don't know why. I am wondering what the dollar is doing. So let's see what happens if we add in a third here. It's going to be the dollar. I want to see what it's doing. Okay. Let's go to the same places where we have already drawn. Basic idea is if we have drawn on top on the euro and the pound, then we draw on the bottom on the dollar. We just find the low to there. Okay. And if I hit my take profit, then I'm a lot closer to being funded at that point because I'm on phase 2 right now. I'm currently trading. This trade that I'm in is a phase 2 trade. I need plus $250. The reason that I'm going for plus 300 is because it gives me some cushion for the next 2 days, or the next two. What I need is 2 more profitable days of at least 25 profit, and so that gives me a little bit of cushion to work with. Let's see, this was 0 degrees, this was up. This was, what is significant is we did, so because this is 0, let me is that low actually? Okay, still equal. Because this is 0 and because this is -9 or whatever. I mean, I don't know, because like what I was saying earlier, because this is 0, I'm not sure if you could say that's like, it's debatable, right? Whether or not you could say that's divergence. But the fact that we sweeped below, actually on both pairs, is, I think, probably significant. Okay, so we're looking to close above this stuff here, this highs in the 15-minute. From here to here. Let's see. Like I said, it's just a little bit confusing with the dollar. I'm not yet 100% sure how to think about the divergence. So I gotta listen. Maybe ICT has some lessons that will clarify that for me, or that clarify that. Well, what I do know is we want the dollar to go down. I want the dollar to go down for this trade. Okay. We can see there is significant divergence between, let's go from here to here, or even there. Oh, you know what? I did that wrong. Delete that. Because if you go backwards, it doesn't do the degree right that you need. There you go. So that one can't see it, but it's negative something. Negative 19. Okay, now I gotta realign these. Close enough. All right. From here to here, that's only -7. Whereas this one is -19. So that is, I think ICT does consider that to be a divergence. So we got to close above, so that's very good. That would entail, I think, some kind of a push up here in a minute. So this divergence, also too, when we look at the dollar right here, we mark up the same spot. We could do basically from here to here. We have plus 15 degrees. So this made a higher high, right, which is expected that these make lower low, which did happen. Okay, so I think that's how you do divergence with the dollar. It's, you look at anything that's not expected, right? So if the dollar makes like a lower low, you would expect euro and the pound to make a higher high, and if that doesn't happen, then that's divergence, right? Okay. Learn by doing, learn by looking, learn by okay, yeah, I could have taken profits right there when this thing was up here, and that would have put me like right, I think just above. I think it went just above 250, which is what we need, what I need. But I mean, I think if I hold in there, hang in there, I don't think it's too much to expect it just to go at least test this high here in a little while. To try to at least try to break above it at this point, because this range, let me go here. This range, when you look at it, we can even use this tool. Actually, let's not use this tool. Let's use something else. When you look at the range, does it allow you to mark the halfway point? Yeah. Middle line, red, dotted. I think that's probably fine. Kind of like that a little bit better. I think this is easier to see. Okay, so the thing about it is normally price should push down and then come back up and either react right off of here, this range, or get up in the middle of it and then see a bearish reaction. But like, it closed above the halfway point. So what does that mean? I mean, isn't that bullish? So let's jump back over to over here. Okay, we had this big one drawn here. Let's do that on the dollar. So that's from here to about right there, I guess. Or we could do it over here. That's +2. So it went up. So we would expect this to go down, down. So that, I think, is a double divergence. Basically the dollar, and then diverging with both the euro and the pound, which, you know, I hate to say it right now, because I'm so close to my take profit, but that would actually be, I think, in theory or technically, bearish for the euro and the pound. Of course, we did see a move down after that and swept this liquidity here. So, you know, we could be heading back up. I wonder if we're creating any kind of divergence between this point and this point. I know we got a lot of lines. But that's going to be something that I'm going to want to know. We'll start with the... Well, this is basically... Okay. So it's going to be... It's going to be on the top side here, from here to here, and the bottom side there. Okay, we're getting very close. Okay, so I guess from here to here. And then from here to here. Okay, that's -1 degree, +2. -2 degrees. So this made a higher high, these made lower lows, so that's in line with what we expect. So I guess the most significant thing I think is the fact that we swept liquidity, and CPI also pushed up Um, you know, right here, this is CPI for the GBP, the Great British Pound. Okay. Three o'clock is coming up. You know, sometimes when you get a higher time frame change, in other words, a new day or a new 4-hour candle or a new hourly candle or something, you can get a slight retracement at the beginning, and then if there's going to be a continuation, a lot of times you'll see a slight retracement first and down, and then a continuation up. So I'd like to, if we can hit this before the close of the hour, which is 3 minutes away, that'd be ideal, because that way I don't have to sit through a retracement. Okay, we have a new 3-minute candle that just opened. We talked about going up to 27,000 being the underside of some of this here range up there. So let's get down to the 3-minute candle. Two minutes left, or a minute and a half on that. And I might just see how close we can get. If I can just I might just close it. Okay, 30 seconds left. You just get a spike up, just to push up real quick. I think that's going to be it right there. I should close it right now. I really should. So here comes the just that move down on the hourly that I was talking about. What does that look like? See what I was saying? I mean, it could just keep going up right now. You know, that would be easy too if it wants to do that. You know, it's not. If that's what the market wants to do, I mean, it can definitely do it. There it is. There it is. There it is. There it is. This is account number 793. Account number 793. We're going to look account number 793. Okay. Log out to, is it this one? We're going to have a look. 793 should be, both these should be phase 2. That's 788. This email here. Okay. Phase 2. 793. 793. There's the trade. Okay. 793. Goal is, minimum profit target goal is 250. We just hit 308 right here. As you can see, the rules are 3 days. Let me show it right here. Okay, you have this rule right here. Minimum profitable days 3. A profitable day is a day on which the closed position made a positive profit of at least 0.5% of the initial balance. 0.5% is so commission on those. Yeah, cool. All right, wow, that happened. 5,000 times, what did we say? 0.5%. That's $25. So what this allows me to do, because I'm above 250, and because I have, you know, let's say I need 2 more minimum trading days at 25, I can go in there and I can risk up to $25 each day. And look at that equity curve. And look at that, from 4,700 to 5,300. But I could go in there and risk, say $25 to try to make 25. So I could even do like a 1-to-1. If I lose $25, like just be done for the day, for that day, and then come back, try again. The next day I could do the same thing if I wanted to, and I'd still be right at 200. I mean, I could go for a 1-to-1 if I wanted to, and then even if I lost, I'd still be right at 200, and then I could try again. Or I could go in there and break it down however I want. Like, I could go in there and risk, say I got $58. Let's say I want to give myself 3 days. So I could divide that by 3. I could say $19. So I could go in there and risk like $20, try to make 25, or risk $10 and try to make. That would be smartest thing to do. Risk like $10, try to make like 30, right? And that would give me, basically 58 divided by 10. That'd give me almost 6 days, basically 6 days. Or 6 trades or whatever to try to get one more plus 25 day. And then if that happened, well, then that's 25 more dollars, right? Which gives you an extra 2.5 days there, because I'm already above that balance. See what I'm saying? So, like, even if I lost the 58, right? Even if I lost that, if I got 25, then, and I was only risking $10 a day, then they got to give me, like I said, even if I lost the 58, if I did get one day that was profitable, 25 at least, then at least gives me another 2.5 days. But I'd probably be targeting 30 just to be safe. Like just a 3-to-1, simple 3-to-1. But look at this trade though. Let me see how many pips was that. Oh yeah, I mean, I think we're going to go potentially we go higher. That was 60 points, 600 points, or 60 pips. So that's a good one. We have the stop loss. So let me just show my full account, everything, all the trading that I did so far. So I had a rough start, and I was in severe drawdown of whatever this is, right? 51 minus 49. Wait, hold on. 51 plus 49 plus 47 plus 21 plus 20.
It's 188.
So yeah, like the first day I lost $188, right? And yeah, then I lost a whole bunch more, right? So this is basically like a Hail Mary, right? Where just unbelievable. I mean, look at this. That was just a crazy trade. Like, thank God that CPI went my way. I mean, honestly, some people call it luck. You can call it whatever you want. I placed the trade and it worked out, Some people call it blessing or favor or whatever. I'm not saying I'm perfect, but at least I'm trying to give some credit to God. But yeah, that's my account there. So glory to God, glory to Jesus Christ of Nazareth. I give the glory to God. I give the glory to Him, not me. So actually, I just got another phase 2 yesterday. So I had similar drawdown. In another phase 1 that I have. So essentially, if I get 2 more days of plus 25, then I get funded with. They call it a $5,000 account, but it's really a $500 account. Okay, so we have another CPI coming up at 5 o'clock. If I could find a place to get in, look at that entry. What is the risk to reward there? That was literally the take profit that got hit. 613 right there. My stop loss was 259.59, which is this. Or sorry, I didn't draw that actually. 259. What did we say? 259. 259.59. And we can actually find out real quick by punching in all these numbers. What do we have on our clipboard right now? 26. That's arbitrary. Yeah, that's not anything. We can find out what that trade was by doing this. Oh, 2606. Yeah, that was the entry there. Stop loss was here. Take profit was here. Yeah, that was an insane trade right there. That was a 12 to 1 risk to reward ratio. So something to note is you could have expected this to be hit up here, because this is only a half quarter right here. This is only a half quarter level. It's not as powerful as this level, because this is a quarters level. So you could have expected this to be hit up here, and if you wanted to do that. I just didn't want to push, as they say, I didn't want to push my luck or whatever, or good fortune. I didn't want to push my good fortune, because I had it right here in the bag. I had it in my hand, and I wanted to grab it, and that's what I did. And I didn't want to get greedy. I think that's a big deal. So look, it went all the way up, to basically test whether or not it was going to break this high. So we don't know yet if it's going to break it. I think it probably will. But regardless, there's this quarters level up here. Yeah, and so we had a reaction off of it, so that would be like a profit taking level. So something we could talk about real quick is what ICT teaches, or what I learned from him, is that if you draw from here to here, you end up with these levels that you can put on your optimal trade entry tool, or your fib tool. We can expect, a lot of times you'll get, definitely most of the time you'll get a 62, right? You'll get to the 62. That's where you can take your profits most of the time. You take partials usually here and here, and then you can usually close full here. Sometimes we get a symmetrical price swing up here, but obviously your odds are higher here and here, right? So this is what we're seeing. We're seeing also a completion of the daily range as well, even though it's only 3 o'clock. The CPI, because the CPI pushed up so high, we've already basically completed the daily range, right? So we could definitely see a retracement here, because this key level is just slightly below the daily range completion, which would be up here. Now, price could push up, break this high, push up to here, sweep even some liquidity from sellers, and then possibly see a retracement once we have actually pushed through, because the daily range, average true daily range, because especially with the CPI propulsion, we could expect to see a larger average true daily range, or a larger daily range. And also at a day like this where we've seen such a propulsion here, and also a major higher time frame liquidity sweep, plus the propulsion of CPI, plus we have another CPI coming up, which I don't know which direction that'll go. It could go up, but right now as we stand, even before 5 o'clock, I would say it's not unreasonable to expect a push up to symmetrical price swing, also to this level, also to possibly test these levels here, and sweep this, possibly grabbing some, smaller time frame liquidity for potential retracement back down into, not that it necessarily has to retrace down into here, but let's not forget that we do have a range here, which is highly significant range to be on the lookout for well into the future here. But so it's possible we could push back down into there. We don't have a middle line for this one. Let's add that. We just did the other one. Let's see. What do you think? Is that all right? Yeah, I guess so. For now, let's do transparent 50. What is the transparency of the actual backgrounds? 15. It might be too much. We'll do 25. Okay, that's fine, because we can still see it. It's just not obtrusive. In a way, that this is almost too much. You almost want this to be 10. It just, otherwise it's just intrusive, right? So save green. Okay, so we have the middle point there. So what we could expect possibly is, if we see something like that, a push above here, grab this liquidity, come back down. Maybe there's a confluence of like the halfway of the daily range. Also, you have the opening, the daily open. Actually, the daily open, this doesn't really mark it correctly. The actual daily open is, can you see that little point right there? That's the actual daily open. So this daily open is not even correct. So if you want to mark your own daily open, it'd be right there. And I don't have it extended yet, but this would be midnight opening price, 12 a.m. as you can see. Get this straight. Okay. And whatever the time is, could get that extension. Okay, that's it right there, actually. Okay, so that right there, Thursday. Okay, that's your 12 a.m. open. We had a dip below. This is classic ICT power of 3 scenario with a liquidity sweep. Okay, and look at this. I mean, beautiful, really just gorgeous, beautiful. I mean, if you love trading, you love this. You know, you suck the milk from the cow's teat. You know, and that's what trading is. Yeah, so I'm fully expecting symmetrical price swing. Also, potentially what could happen is, I don't know if we're going to get super crazy about it. Okay, so it's almost 3:30, so 4:35. So what is, you know, it's something that could happen is potentially we could consolidate somewhere in here, right? And then maybe the 5 o'clock CPI pushes us up into here, right? And then maybe we get a retracement on the day, come back down into here for tomorrow, and then potentially tomorrow we could see a continuation, something like that. If we go to the weekly, or the weekly view so far, right? You could visualize Monday, Tuesday, Wednesday, right? So classic ICT weekly range theory is that we make the low of the week. Usually, this is what he says, it usually happens Tuesday or Wednesday, right? It's power of 3, but on a weekly scale, a weekly time frame. So what that means is the rest of the week could be bullish. So even if we got a little pullback into here or something like that, we're going to be seeing an explosion. So here's the deal. If we see a pullback into here, we could see an explosion up. Today's already Wednesday, so we could be seeing even explosion today. We could be seeing more explosion today, and then maybe a small retracement or something like that. I'm just, you know, like, if we break out of this range, so CPI, in other words, okay, so maybe get a little bit of something in here, but retracement maybe, but and then we have this range. If we break out of this range today, maybe we can see a retracement back into it, right? And then like a continuation, like on either like late Thursday or Friday or something like that. So obviously nobody really knows exactly what's going to happen. It could just continue bearish if you look at the higher time frame. You know, we do have a lower high here, and you know, but this liquidity here is something that is very interesting, and because we swept that, we could just be headed up. Now, considering that they are expecting interest rate cuts this year, you know, that means obviously the dollar goes down this year, and it's still early. We're only in January 17th, so that would mean euro and the pound goes up. And just want to peek over here real quick. So the dollar is barely even started to go down, right? So we had this divergence that we talked about, right? So we're just seeing that. Now, okay, so here's something. Now, if you want to trade this whole thing right here, you're going to want to look for the euro, right? So in other words, we're on the pound chart right now, but if we simply go to the euro right here, then we would be actually wanting to look for an entry probably on the euro, right? So you can see a lot of people buying this up, buying this up, buying this up. Why? They're expecting a bullish outcome for CPI on the euro right here, which is going to push the euro up the same way that the GBP CPI pushed the pound up. The question is, do you feel lucky, punk? Because we've already moved up so high, we can expect, some type of, do you just want to just keep buying, in other words? This is like very efficient, as they say. Everything getting filled in. A little sweep of that low there. I would think this is just going to keep going. I would think if you were going to enter, you missed it already by a few minutes. Unless it goes back down to here, and that's where I would enter. I would enter right here and just hold. So I'm actually going to end this video, and I'm actually going to consider that myself. So let me go, and we will talk to you later, and see you in the next video.